Good afternoon, folks. We're glad you could join us for this version of, well, it's the first version of a virtual Chamber Connects. Hi, I'm Dirk Draper. I'm the president and CEO of the Colorado Springs Chamber of Commerce and Economic Development Corp., the Chamber in EDC, and we're really glad you joined us today for this panel. We know the questions that we're hearing in the business community, and today's panel is intended to help address some of those, at least the questions that you know and that we know today, because we know it's a very dynamic environment and these change day by day. So what we're doing with our Chamber Connects programs, we're pivoting these to be a virtual delivery of this forum that we'll host on Thursdays and bring subject matter experts in areas that are of concern to you and the business community. Today we have a panel on legal, accounting, and lending issues. It's a discussion that's going to be facilitated by Bobbie Collins with the firm of Lewis, Roca, Rothgerber, and Christie. Let me just introduce briefly our panelists, and then I'll turn the program straight over to them. We will, at the end of their presentations, have time for Q&A. We'd ask you to open your Q&A line. If you scroll over the bottom part of the screen, you'll see a circle with a question mark inside a square there, and it's an opportunity to submit questions for their group to address later. Here's our panelists for today in the order in which they'll be speaking. From the firm of Lewis, Roca, Rothgerber, and Christie, Eric Kniffin will be speaking about labor and employment. David Kunstle will be talking about financing. And Bobbie Collins will be talking about individual tax relief. And as I mentioned, she will be moderating facilitating the panel today as well. The accounting firm of Stockman, Kast, Ryan will be represented today by managing partner Trinity Bradley-Anderson and joined by Jordan Empey. Five Star Bank is represented by Aileen, Senior Vice President of Commercial Banking. And later in the program, we'll be joined by Yemi Mobolade with the City of Colorado Springs. He's the Small Business Development Administrator. Yemi's having some technical difficulties. Just really proud to note on a Chamber of Commerce aspect of this, all three firms are represented on our board of directors, and we appreciate the expertise that they have offered to bring to the business community today through this. Bill Nelson is on the board from Lewis, Roca, Rothgerber, and Christie, one of the partners there. Trinity Bradley-Anderson and Aileen Berrios are both on our board as well. And just want to say thank you, directors, and thank you, panelists, for the information you're going to share with folks who are on the line today, nearly 100 callers. And Bobbie.
Thanks, Dirk, so much. I hope everyone is doing well in these unusual and crazy times. I'll just give you a little preview of what we're going to be doing today. First, we're going to start a little bit on the legal side, and both Eric, David, and myself are going to give you kind of our perspectives of things that we're worried about from our kind of position in life right now. Next, we'll turn to Trinity and Jordan to talk a little bit from the accounting perspective, and then from Aileen on the lender perspective, and then last, Yemi will share maybe a little bit both from his being an individual business owner as well as his position with the city. So at this point, we are all assuming that you're at least have kind of a working knowledge of CARES and some of its provisions, and want you to know that all of us who are panelists have lots of questions ourselves. So we're hoping that today will be helpful for you to understand things from our perspective, so that as you're working through all of these issues, you can understand a little bit of the concerns that the professionals you might be working with are having, and we'll share what we know and that has developed in the last week in the meantime. As far as today, as Dirk mentioned, we will be having a Q&A at the end, but feel free to pop in your questions in the meantime in the Q&A box. And this video is also being recorded and will be posted to the Lewis Roca website probably in the next day or so. If you've got questions you want to follow up on later or want to share with others who weren't able to attend. So with that, I'm going to go ahead and turn it over to Eric Kniffin to chat a little bit about the labor and employment issues that he's seeing.
Thanks, Bobbie. As Bobbie mentioned, we are going to presume here some basic familiarity with the CARES Act and with the FFCRA. This is, I'm glad we're getting here. In the past week, all of us have been digesting. I think there's been a lot of webinars, a lot of other things been put out about here's what the law says, and we're transitioning now in the process of doing so to try to help employers have some practical guidance into what's going on in these laws and how to make the most of those opportunities. So first off, what are your, as an employer, as a business owner, what are your obligations and opportunities under these new laws? The first one is the FFCRA, and the most important part of that right here is the paid leave part of that. That paid leave started yesterday, and so if you haven't notified your employees, you need to do so. Normally, we notify our employees by putting up a poster in the lunchroom. That doesn't really do a lot of good, and when the lights are out in the lunchroom and no one's in there. And so there are, on the Department of Labor's website, there is a poster that you can email out, and there's some Q&As there that are available. That applies to employers with 500 or less employees. And then the other thing we'll be talking about today a lot is different types of financial assistance available under the CARES Act, which was passed last Friday. In particular, the one that's gotten the most energy is the Paycheck Protection Program. That also has a 500 employee limit, but it's important for you to know that those 500 employee limits are different. The first one for the paid leave is determined under the counting rules used by the FMLA and the FLSA, but for the Paycheck Protection Program, that uses the Small Business Administration's affiliation rules. So they are different. So just be aware that if you're close to that 500 employee threshold, if you have other affiliates, if you're not just a very simple one-shot business, it may be that you are subject to the FFCRA's leave requirements, but not eligible for a PPP loan, even though they have the same numerosity requirement. So pay attention to that. For employers that are eligible for both, how do you take the most advantage of these programs? We are highlighting one issue for clients that you may find yourself in a situation where, so under the PPP loan, you have 8 weeks after you receive the proceeds in order to spend them on certain expenses, payroll, interest on your mortgage or your rent expenses are the major ones there, utilities as well. If you're close, if you think you are going to be close to not being able to spend all those proceeds within 8 weeks on those expenses, it may make it even harder to do so if your employees are taking paid family leave during that time, because that will be 2/3 of their normal salary. So there may be an issue there where separating out or encouraging your employees to separate, you can't require them to do so, but encouraging your employers to take their family leave later can help you maximize the benefit from these federal programs. It can maximize the benefits to you as an employer and also maximize the benefits to your employees. That, of course, depends on the timing of all this. And that's a lot of the sort of practical questions that we're getting already about the PPP program. How quickly are banks going to be able to process these applications? How quickly will these loans be funded? That's a difficult question that maybe we'll get some insight into that here today, but that's a practical question I want to flag for employers, again, as you try to figure out how to make the most of these opportunities and how to get from here to there. The last practical issue, some employers have already terminated or furloughed employees and they're wondering, is it too late? Have I already shot myself in the foot? No, you haven't. If you have already furloughed or terminated employees, that will have a de minimis effect on the amount of a PPP loan you're able to get, because the way you calculate your eligibility, the eligible amount you're able to get, you look back 12 months over your payroll. So anything you've done the last couple of weeks is going to have only a small effect on your amount to get that loan. The loan forgiveness part of it does depend on how many people you've kept on your payroll, but you have an opportunity to add people back on by the end of June. And so even if you have furloughed some people, you're able to get them back on the end of June, and that allows you to get back to par and maximize your ability to capture loan forgiveness there. As a general matter, please, we welcome your questions. We're not going to be able to get to all of them here on this call, but it really does help us to understand where you are at as businesses going through this. It's the same thing that's true of the SBA. The SBA is receiving a lot of questions and comments and concerns because they're trying to figure out how this program is affecting people, and us too as attorneys. It helps us to understand where you're at and understand how to best serve you all. With that, I'll hand it back to Bobbie.
And I will pass it to David.
Okay, thank you. Well, as we know, the business closures and the impact of the COVID restrictions are really unprecedented during our lifetime, and I've heard it described for businesses as if our economy has been placed on medical life support for some weeks or maybe months to try and delay the impact of the virus. And of course, businesses are looking around for how do they get through that period. So what I wanted to talk about a little bit was just kind of a broad overview of the loan and grant resources that are available to businesses, some that are currently available and others that are coming. And of course, by the way, there's a great resource on the Chamber website on those that are currently available. So I would direct you to that. The one that everyone knows about is, of course, the $349 billion for the Paycheck Protection Program. But there are others that aren't so known. The CARES Act also includes $454 billion for economic stabilization loans. So I want to talk a little bit about that as well. The first, most immediate source of relief is the SBA Disaster Relief Loan Program, and particularly the grant program. There's an advance of up to $10,000 available for those who are eligible for the disaster loan and make an application, and that is to be paid within 3 days of the application, and that is fully forgivable or doesn't have to be repaid. So that's essentially a grant, which is the most immediate lifeline. Everyone knows well by now about the Paycheck Protection Program, so just a couple of highlights on that. Really, it's intended to provide 10 weeks of payroll based on the historical 12-month payroll for the business, and of course, the main feature is it's eligible for full forgiveness. As Eric mentioned, one of the questions we're getting on the forgiveness side is, what if I have reduced my payroll, because that affects the forgiveness portion? And as he said, there is a cure period for reductions. So the forgiveness is reduced based on workforce reductions, either in number or in pay. But if reductions happen before the end of April, they can be cured by June 30th. So that is an important feature. And another limitation to be aware of, there are some limits on whether borrowers can have both the Paycheck Protection Loan and the SBA disaster loan at the same time. Hopefully we'll get some more guidance on exactly what those limits are. But the current understanding is that both loans cannot be used for the same proceeds for the same purpose. So a company may have an existing disaster loan for one purpose, but if you apply for both at the same time, which you should be able to do, you can't use the same loan proceeds for the payroll or the mortgage or the other purposes. So shouldn't prohibit you from applying for both. If you do have a disaster loan for those purposes, you can refinance it into the Paycheck Act. So there is some flexibility there. One of the tools that hasn't gotten as much press is the SBA relief for 7A borrowers, which was also part of the CARES Act. and that is that the SBAs will pay principal, interest, and associated fees on existing 7A loans for a 6-month period. And this was Congress's sense that really all borrowers are significantly affected by the COVID disaster, and a desire to provide some loan relief to existing 7A borrowers. This loan relief also applies to new 7A loans that are originated before the end of September. So that's another significant tool that businesses should be aware of, and it's one more reason to contact your SBA lender. So sorry, Aileen, you're going to get lots of phone calls, I'm sure. So what else is coming down the pipe? We've been so focused on the paycheck program and others, but it probably makes sense to talk a little bit about what else is in the CARES Act, and because there are some potential tools under the stabilization loan program. That's the $454 billion under before the CARES Act for small and medium and mid-sized businesses. We'll know more after regulations come out. The statute says that those are supposed to come out within 10 days of passage of the CARE Act, so they should be out as early as next week. What we do know is these are not going to be as flexible as the paycheck loans, disaster grants. Loan forgiveness is not available for the 4B loans. And they are really aimed at borrowers that did not receive adequate relief under the CARES Act. So again, we'll get some clarification on what that means. It may mean that paycheck borrowers are not eligible for those loans, but we'll find out more. But in any case, it could be a good source of relief for businesses that are over 500 employees and aren't otherwise eligible for the paycheck loan program. The 4B program specifically includes guidance from Congress for the Treasury to establish an assistance loan program for mid-sized businesses. So again, this is aimed at businesses over 500 that wouldn't be eligible for paycheck loans. And we do know a little bit about those. The statute says they're an interest rate of not to exceed 2%. And there's also a 6-month deferment of principal and interest. So advantageous terms on those, but there's also a lot of strings attached in the statute, including that they maintain 90% of workforce through September 30, and then restore it also after that. And there's also some other restrictions, but that's another potential tool. Also, the Federal Reserve announced a Main Street business lending program aimed at small borrowers on March 23rd. I don't believe there's any further guidance on that, but Congress did address that in the CARES Act and basically funded it as part of the $454 billion piece for 4B. So that's been announced and funded. So that one's coming as well. And besides all these federal resources, there are also local resources. We're going to hear more about the Strive and Thrive COS program that the Chamber is also supporting a little bit later in the program. As Eric said, I think our general sense is at this point there are a lot of questions, a lot of good questions from clients and borrowers. And in many cases, there just aren't many answers yet. One of the reasons for that is we've all scoured the statutes, we know what they say, but what's really needed at this point is further regulatory guidance from SBA, Treasury, Federal Reserve explaining how these programs are actually going to work. And what we're hearing from SBA lenders and others is that they are also waiting for that guidance. So it's forthcoming. We know there's the paycheck applications are supposed to be starting being accepted on Friday. That's tomorrow, isn't it? But again, there's a lot of guidance out there that's still to come. So we'll hear a little bit more about how to approach that. And there are a lot of details. I know that Jordan and Trinity from Stockman Kast have been working through those with their clients, and so I think they're going to talk a little bit about some of those details and also the big picture, the long term and the strategic issues that they're thinking about.
Yeah, thanks, David. I appreciate that. Again, my name is Jordan Empey from Stockman Kast Ryan. I'm one of the tax partners there. And we've been taking this whole approach to various stimulus packages kind of as a phase approach, mainly looking first to provide cash flow through any incentives we can, either on the lending side or the tax side, to try to get that to our clients as quick as possible. So first we began with, just to recap recap a few things for audience members. The deadline has been moved from April 15th to July 15th for individual filing. They weren't quite quick enough for those partnerships and S corps, but those can be extended very easily. So focused on 2020 estimated payments. And then with that came the Family First bill. I'm not going to say the full thing that Eric did, but we call it the Family First bill. And, we focus on that quite a bit. I think the big takeaway we want to provide there is if you can front the cash, you will be made whole later through payroll tax credits. Doesn't apply to everybody, but that's just the kind of highlight on that end. The next thing we really have been spending all of our time in at the moment is the PPP program. We're working on a lot of applications with clients, trying to get them fully prepared ahead of time so that they're ready to go, as David mentioned, tomorrow, which should be quite interesting to see how that opens live and where we end up. A few things on the accounting side that we're noticing is these calculations, while fairly simple, aren't that clear cut. One big thing to remember is any employees or owners earning over $100,000 need to have kind of a haircut on that amount that you can apply for the $100,000 in excess of that. It's not eliminated into our knowledge, but you just can't go above. There's a state and local component. We're seeing a lot of people maybe not including SUTA in their calculations. And to be frank, a lot of people without the regulations are kind of just trying their best to come up with this calculation for the PPP program. So in the short term, that's where we're spending all of our time at the moment, is just trying to get our clients fully prepared for those applications, with the goal of the cleanest application possible. Hopefully that goes through underwriting when they do come up with the rules as quick as possible. And really the goal of that from our perspective is the PPP program is really there to maintain your employee base. If that's kind of your current plan, you're going to get the biggest bang for your buck from that. As David and Eric mentioned, there's the disaster loan program as well. There's various other incentives to look at. So you kind of just really need to look out for the next through June 30th as possible and see where you think you'll be and which resource you should go after. The next set of the CARES Act has quite a bit of tax incentives as well. One big thing to mention for a lot of real estate people or retail clients, tenants, they did change the technical glitch from tax reform for tenant improvements. And so we're using that to get cash directly back to our clients because that's eligible now for 100% write-off. And that could be material for a lot of people on their taxes. These are some of the short-term areas that we're really looking at. We're doing it in phases. And the CARE Act has quite a bit of tax items that are going to go on for quite a while. And I know in our 5 minutes, Trinity wanted to talk about some of the long-term aspects as well. So I will sign off until questions. Thank you.
Thank you, Jordan. So, Jordan mentioned that there are long-term aspects to the CARES Act that, people haven't really paid attention to. Those things are opportunities that we will either, find in your 2019 return and more likely in your 2020 return. Once we know what losses are, we're going to be able to carry back those losses to 2019, assuming income was higher in 2019 and be able to get refunds and get money back that way. Tax liability and the lack of paying taxes increases cash flow. Unfortunately, those measures aren't something that are of immediate impact and will necessarily get cash to a business owner today. So our focus has been really more on how do we help immediate cash flow. As we've been going through these conversations with our clients, we're also trying to step back and ask them harder questions. And so, I'll take a little bit different approach from what everybody else has been in speaking directly to the programs at hand. But, I just kind of want to, as I'm talking to business owners, I'm asking them, one, how are you going to use this money? What are your plans around your business? I think kind of going back to Malcolm Gladwell and that concept of a tipping point, we are seeing, disruption anyway. But I think whatever our normal is going to be once we come out of this situation, whatever this is, when that happens to be, I think, our behaviors are going to change. How we do business is going to change. And so none of us has that, crystal ball, but I'm really prodding people to think beyond just the immediate and start thinking about what are things that you can do differently in your business to take advantage of this disruption. Don't just automatically assume that, okay, here's this pool of money, depending on how that's coming through, when it comes through, that your business is going to be run the exact same way pre and post COVID. So just really trying to push people to think about some of those issues. I think the reality that we're all facing is we're not going to be able to have a stimulus enough to take us out of it. Human ingenuity is going to be that thing that moves us forward. And we're already seeing so many versions of that. Locally, when you start talking about distilleries making hand sanitizers as opposed to alcohol, when you start seeing local businesses move swiftly to being online instead of having a storefront, when you're seeing, the restaurants doing, delivery and carry out because that's how they're trying to keep their business going. We've all seen the Little Caesars commercials about the pizza that's contactless, right? It's 400 degrees, comes out, no touch, goes into a delivery mechanism for carry out, takeout, and has no human contact. Again, we're starting to see some businesses think in that direction. And I really want to push people to really think about what's next, what becomes that. Pandemics have been a part of human history since humans have been around. They have always been that big disruption and that tipping point. We've survived it. We thrive as a species. This is no different. So let's start thinking about what is coming after this. What are your long-term goals? Don't just take a loan that you don't know how you necessarily are going to repay it. The decisions that you make right now are going to have a longer term impact. And so just ask yourself those hard questions. I'm coming at it from both wearing my CEO hat and also my client advisory hat, because I'm asking myself those same questions as Stockman Kast moves forward. How do we do that? And so it's a natural transition for me to start asking clients those questions. So again, it's a slightly different tact from the specifics that we've been talking about, but I do think it's important to kind of, as leaders, as business owners, to kind of keep our heads up and keep our eye further down the road than just that immediate speed bump that we're facing right now. And that's all I have. So I think it's over to you, Aileen or Bobbie.
Yes, this is Aileen. Hopefully everyone can hear me. So on a lender's perspective, the first thing I'd like to say is please be patient with your bank. The banks are very inundated right now with people asking and people trying to figure out how to do the calculation and whatnot. So I think the most important thing is the banks do want to help. However, the banks are being inundated with a lot of applications. There's a few things I want to point out about the application itself. One is you may want to open some suggestions. You may want to open a separate operating account to run your payroll through. This will help, this will help the bank understand the use of funds. So really the PPP program is really to support your payroll. And so some of the figures you have to calculate, and probably the easiest way to do that is the 2019 average payroll. You have to subtract anyone over 100,000. So if someone makes 130, you subtract 30, you get them down to 100,000. That's an annual basis. Divide that by 12. Okay, so probably the easiest way is just using your sources, using your accounting firm or your payroll firm, if you have your payroll done separately, to come up with that calculation of average payroll for 2019. The other important calculation is your FTE. So your full-time equivalence is a different calculation than what your average monthly payroll is over the average of 2019. So FTE, full-time equivalent, how many employees did you have over that 2019 period? Again, that's another average number. For seasonal employees, the guidance we've seen is to match the period, for example, 2/15/2019 to 6/30/2019. And what was your gross payroll then and FTE then compared to maybe that same period for the PPP loan? So I hope that provides some clarification on the calculation. The other thing I just want to mention is the SBA has not given the banks guidance yet on some of these details. So we're scrambling. We're hoping to get that today. We're scrambling to get on calls and conferences and webinars to learn what are the SBA rules for the bank and make sure that we can help our customers and process these quickly and get the money to the needed businesses. Now, I do want to say that my husband and I do own a business, and so I'm feeling it on the business side as well as the banker side. So I did fill one of these out, these applications out, and do take it seriously, the questions. Please be very truthful. There's some serious fines on there that is right on the application. So please take it seriously. Take your time, read the instructions, get your calculations. You will have to provide your bank documentation for verification of the payroll, your average, as well as when the day the loan funds, you need to calculate that next 8 weeks, where did that money go? And this is why the suggestion of opening a separate operating account may help with that calculation. We don't have specific direction from SBA on what they want to see for proof from the banks, but you need to make it easy for your banker. So the easier you make it in providing that proof, here's my average for 2019, here's my FTE count, I apply for the loan, I read the application thoroughly. I'm good with every answer on that application. And then the verification after the 8-week period. So the loan funds on whatever date, then 8 weeks after that, again, please make sure you have your documentation so that you can provide that back to your bank for verification of what that forgivable amount will be. So that is the program. If you cannot get 100% forgiveness, and I know Every business will try to get that 100% forgiveness, but if you don't worry, because it's a 0.5% rate and it's for 2 years. So if you get 75% forgiven or 50% forgiven based on those calculations, the loan is still out there for 2 years at 0.5%. So hopefully that provides people clarity on the program for PPP. And please, ask your loan officers at your bank questions on how to start that process. But I do ask everyone to be patient with their bank. We are scrambling to get further clarification from SBA on the process, the funding, the documentation. Some of this stuff hasn't been created, or they're creating it now through SBA and it hasn't been provided to the banks yet. So these are things, these details are the things the banks are working out. So please have patience with your bank. And that's it for me.
So I'm going to chat a little bit about the individual FICA tax deferrals and credits. This is a really important on the individual side. I think the discussion the last largely protection program and what employers should do, but I don't know that I'm necessarily hearing a kind of
I think you're coming in and out.
Sorry. I will try my best here. I'm having internet issues today.
Much better, much better.
Okay, sorry about that. Thanks for your patience. So there's a little bit of a message to be said here for employers asking their employees to be looking at whether or not they qualify for the individual rebate. Those checks, if you do qualify, if you meet the kind of income thresholds on those, we're hearing should be issued now at this point and closer to about 2 weeks from now. So even to the extent that there have been employees that have been laid off, hopefully that will be of assistance to them. And the other kind of interesting note along those lines is that a lot of the news media is kind of harping that it's a $1,200 per adult rebate. But it's not exactly true because that applies for income levels up to $150,000 if you're filing jointly, and then there's a $75,000 cap for filing separately or single, and $111,500 for head of household. So anyways, there is a phase out for those. So even if you have income above those amounts, you may still be eligible for a reduced recovery rebate. And effectively it comes out to, if you're a married couple making $198,000, at that point you're no longer eligible for a rebate. But if you're under that amount, you may be expecting a paycheck to help hold you over. So I think from the employer side, that's kind of a helpful reminder for employees who are experiencing some distress right now. The other one I want to chat about is the FICA tax credit and employer FICA deferral. We're getting a lot of questions from people who, for whatever reason, are opting not to look further into the Paycheck Protection Loan Program, or they're just not eligible for that because they have too many employees. And one of the things we're really emphasizing is that employers take a really close look on the credit side as to whether or not they're eligible for that, because it's really an individual employee by employee basis of whether or not the employee has experienced COVID related hardships, and the statute's pretty clear on those kind of requirements. So you may have businesses that some employees were affected, but others are not because they continue to remain working because they're essential business, at least for parts of their job. So that's an important consideration. Also, I think maybe Trinity had mentioned a little bit about the employer FICA deferral. This is helpful just in the sense that it's effectively a way of creating a loan for employer FICA taxes without actually creating a loan. So you will end up owing those eventually, but it's an easy way for the government to defer those taxes out over time. So just consider those options with kind of a fine-tooth comb. We've also been getting some updated IRS notices over the last day or two. They're kind of finally catching up to how CARES is implemented with respect to the tax code. So expect to be hearing further information about those as far as the notices go in the coming weeks. And some of this tax side is becoming a little bit more important right now as people are deciding whether or not they should apply for paycheck protection in particular. But it's necessitating this discussion about FICA taxes as well. So that being said, I will turn it to Yemi. Yemi, if you're talking, you're still on mute. Apparently, I'm not the only one having technical issues today. So if
Can you hear me?
Can figure that out. Oh, I think I hear you talking.
It cut out for about a minute. I lost you guys. Okay, I missed the transition. Is it my turn?
It is your turn. Go ahead.
All righty. So hope you guys can all hear me. My name is Yemi Mobolade. I am the Small Business Development Administrator for the City of Colorado Springs. And I've been also a member, hold on here. Okay, I'm also a member of the executive team for the Survive and Thrive COS funding. Now that is the first local funding opportunity for small businesses. It's not the only one. I think businesses need to be aware of all the various opportunity. You need to pursue local, state, and federal. And I think, just as been said by the wonderful panelists, having a plan for how you're going to use your short-term financing is really important. I love everything that's been said. It's very tangible. It's very practical. Kudos to all the panelists. Kudos to Chamber of Commerce for putting this together. I am also a business person as well. I co-own 2 cafes in the area we have been hit. So I filter a lot of my work in the city through my own personal experiences as well, and also testing many of these programs out to ensure that I'm able to pass on the right counsel to businesses. I think what's been said also about having a separate account is very, very important. As you receive this funding, that is great wisdom. You start a separate account, and that way you're able to track better. But from the Survive and Thrive COS opportunity, what this is, it's a way to get the funding more immediate to the small businesses. I do like a lot of the programs that are coming from the federal level, but as you know, I mean, the money's not ready today, and we were trying to get something to the hands of businesses 2 weeks ago, and that's the intent of this program. It provides loans up to $25,000 to small businesses. It's a zero interest the first year, and then it goes 1% the second year and another percent additional the third year. It's a flexible loan. The heart and the spirit of the loan is to get small businesses to stop the bleeding. As we understand that if it's easier to try to repair than to have businesses reboot all over again when this is all said and done. So the loan here is intended to help stop the bleeding. It's made possible by the generosity of local investors, and Exponential Impact is at the helm in partnership with the Pikes Community Foundation. The Chamber and EDC has stepped up big time to put funding into this opportunity. So there are a lot of just generous local organizations and business professionals who are behind this. There's about $1.5 million in the funding right now. There's a lot of efforts to raise that to about $5 million. We've received about 500 applications so far. So that's just that's a sign that there is a strong need. Other things that you should know about this program, it's for profit and also open to nonprofit. It's for small businesses between 2 to 25 employees. The emphasis is on small. That's why we believe the small businesses, not just in the food, cafes, hair salon, barbershop, the retail that have been hit the hardest, but also the ones that with smaller number of employees also have been hit the hardest. There are some businesses that are not eligible. The website spells that out. Exponentialimpact.com. You will find everything you need to know. One thing you need to know about this is in lieu of collateral, investors are not asking for collateral. In lieu of collateral, you have to submit a one-page character reference. Anybody can write that on your behalf. There's also an expectation that is connected to being willing to be helped and to be mentored. It's a 30-minute, once a week meeting where you'll be paired with a mentor to help address some of your most pressing needs. Again, the reason why that's in place is that we want to see the business not only survive, but also thrive. And there's value in being able to receive coaching and just process these decisions right now. It's unprecedented and no one knows. We're just taking this one day at a time. And so don't walk this journey alone. Make sure you're walking with others in this season. So that's a big part of this. The executive team meets. We're meeting on a daily basis to ensure that we're moving this program forward and we're helping businesses as much as possible. A lot of the emphasis now is trying to raise more money for the businesses that are applying. If you haven't applied, I would still encourage you to apply, just because you don't know if my advice is take advantage of the multiple source of funding, but make sure you have a plan for how you're going to use those funds. It's been said that I have a long range view. It's the plan I'm taking also as a business owner myself. I know many of us are just thinking about how do we get through April and how do we get through May. Begin to design scenarios. Potentially, what if we're still in lockdown mode till June? What does that look like? Begin to design scenarios of what it looks like to bounce back. One of the panelists mentioned that life and business will never be the same. That couldn't be more true. Begin to embrace that reality. That whole, I hate the term survival of the fittest, but it is the ugly truth that it's the businesses that can adapt quickly and adapt to the times that would be the ones to survive this new reality. And that's all I have to say for now.
Great. So with our remaining time, we're going to go back and have each panelist just answer one of the that you've either answered already or as we're talking. So Eric, we'll start with you.
I'm going to respond here just to a couple questions I've seen in the Q&A. I have responded to some of those, but let me just, for everybody's sake, in case they're not scrolling through. One question had to do with, I mentioned about the 500 employee cap for the PPP loans. Someone asked, how about franchises? There is an exception within the CARES Act that is recognized by the SBA that says that franchises are not all lumped together under the affiliation rules. And so franchise organizations are not considered as one employer with the parent organization. SBA does have an online franchise directory if you want to make sure that you are on their list. So that is something to check. Another question, is the PPP program available only for businesses that are completely shut down as a result of the pandemic? Or what if, have you cut yourself off if you are trying to at least sell something, so the restaurants with takeout or some sort of online services? The answer is no, you are not cut off from that. All that is required is a good faith affirmation that the pandemic has hurt your business and that the specter of this pandemic makes it necessary for you to access these funds. So it is a good faith statement. It is not very technical, and so it does not cut you off if you are making some effort to continue some sales in the middle of the pandemic.
David, you want to take one?
Yeah, great. Thanks, Eric. Yes, there was a good question about what if I have a SBA disaster loan and grant, and can I refinance that into the paycheck loan, and then would I be eligible for forgiveness? And Jordan responded on the grant. The grant is clearly not forgivable, or the grant is forgivable, but it reduces the amount of the paycheck loan that's forgivable, by up to $10,000. So that part's clear. Whether, let's say you have a $200,000 emergency loan and you refinance that on top of $1 million paycheck loan, does that mean you can get forgiveness up to $1.2 million? Great question. That goes in the category of, I don't think we have a clear answer to that yet. Hopefully we do get some guidance on that. But with that said, I would say there's a good possibility that the answer would be yes, because that's exactly, if you're spending that $200,000 for payroll and other eligible costs, that's exactly what the paycheck loan is designed to incentivize. So if you're in that situation, I would keep an eye on that as well. And maybe the panelists have other thoughts on that.
Dave, I just want to give a clarification on the other cost. It just in that 8-week period, it cannot exceed 25%. So your mortgage, interest, utilities, other purposes that are allowable. If you notice, it's not in the calculation. So when you use your average payroll by 2.5, and that 0.5 is to cover the overhead. Okay, so the SBA will, from what we've received so far, your other expenses cannot be 25% of that total. So hopefully that clears that up.
Yeah, thank you, Aileen. Yeah, that's on they did add that after the statute, so hopefully there's further regulatory guidance on that. Thank you.
I'll just make up my own question I think will be helpful for people. So with the PPP loan, the maximum amount you can get, you look backwards. There's some guidance that's a little bit confusing. The bill actually used a period, what I would call like March 31st, a couple days ago. But the application, and just so to clarify, it's a sample application on the SBA, actually said most people use 2019. So that's one of those unknowns that we're still dealing with. But the max loan, you're going to look backwards. For the forgivable part, you're going to look forward to this 8-week period. So that's very important, just to kind of like separate those two things in your mind. And I agree with Eric 100%. There's a lot of confusion on what you use for employee accounts under all these different acts. We've even heard that on the forgivable part, you're going to be looking at the Affordable Care Act for how they do FTEs. So it's very confusing. We'll have more guidance as we come, but we're trying to get as much out as possible quickly.
Trinity, do you have anything you want to share?
No, I've just been looking through and some of the questions that people are asking, rightfully so, they're trying hard to get into the details and we just don't always have those details. So I just kind of want to echo what Aileen said about be patient. We ran into the same issue when we went to the TICJA, the taxpayer, what's properly called tax reform. We're still getting regulations out of that. I think the overall impetus and the logistics of this is beyond the scope of just a simple press conference announcing that a bill has been signed into law. as everybody's hearing, there's a lot more guidelines and application of information. Do I do this? Do I do that? How, what is fair? Those questions that the public is asking, we are also asking too, and just trying to navigate, through that and apply information as best as possible as it's coming out. So, it's a brave new world, and every press conference, every announcement of, a potential stimulus act. Now we're hearing, that there might be an infrastructure bill coming, trying to follow those types of negotiations, what that comes out, what it could look like. The devil is in the details, and we just don't have all of the guidance for that. So I think all of the regular Treasury, Treasury's on top of it, trying to move as fast as they can. FDIC, the Federal Reserve, and the banking industry, they're trying to move as fast as they can. So I think it's the logistics of being able to get money to people quickly is not something that we are geared for. And so again, I think we're seeing things like unprecedented, like, how are they going to get the $1,200 to every taxpayer? The logistics of that, getting that quickly to people. You may not have ever given the government your bank account. They didn't have that for a refund. Some people take that approach, so they're going to have to wait for physical checks to come through. So there's just a lot of logistics that are just being figured out. And I think everybody is, when I say that, I mean, it's very clear that the public officials, the government agencies that are trying to run this, professionals who are trying to interpret it, everybody is trying to go as fast as we can and trying to meet the needs. We just don't know. And, we're all anxiously waiting like everybody else is.
Yeah, well put, Trinity. Thank you. And I just want to address another question someone had asked on what salaries and healthcare costs are. My understanding right now is if you do have healthcare costs, that can be included. Bonuses can be included, but I'd be careful because you have to pay them out within that 8-week period, and it cannot exceed the 100,000. 1099s was another question. Our understanding, it can be included as well if you're issuing 1099s for employees. So I just wanted to address those questions that I saw. I'm not able, by the way, to respond to any questions on the Q&A. For some reason, I'm locked out. So forgive me if you've asked me. I've had a couple questions to me direct, and I just want to say sorry. I tried typing the answer and I cannot hear them. So my apologies.
Just panelists, we'll get associated with afterwards.
Bobbie, we couldn't hear you.
The panelists will get copies of the questions asked to follow up with whoever that was by email. I'm going to spend my portion just ask a question for Stockman Kast on one that I've been thinking about is I'm curious if you're having clients come to you already to look into doing amendments for taking advantage of like that.
Bobbie, you're tipping out on us, so we couldn't hear that question. Sorry.
If you type it in the chat, I'll be able to see it.
Reorient myself. My question is for Stockman and Kast. If you guys are having clients come into you already to talk about amending returns to take advantage of like NOLs and corporate AMT and business interest expense, and if you are, I'm curious what you're advising them is a likely time frame that they might actually get the refund back once it has been filed.
Yeah, some of these items actually you can do a change of accounting. which is a Form 3115, and you can do that with a current return as well. So it doesn't always require an amended return, which is kind of big in that regard because it saves the 2019 money. A lot of the updates from the IRS in the last week they're kind of shutting down. On a funny note, we still have a couple audits going, so not everything is shut down. A really funny audit or thing is they sent, we think, about 150,000 letters to anybody that owns a captive insurance company. So there's various things going on, but my guess is the refund's going to take a little bit longer than normal. If that answers your question.
And I also kind of want to note that, it's, for quite a few people, losses were not an issue in 2019. So, the economy was doing pretty well. So we would see losses on the 2020 tax returns that would then be carried back to 2019. So that's really a longer term strategy, that you have a 2020 loss that we want to file the return as quickly as possible. And then we would want to, basically apply that loss to your 2019 income and get a refund. So the loss returns, we haven't seen those yet. The losses are being generated right now, unfortunately. So that is probably more of a medium-term strategy on the loss on the NOL piece of it. Did I answer that question, Bobbie?
That's great. I mean, if you want to give us just one last thought, I know we're right at the top of the hour, so.
Let's see. Hi, Dirk Draper. The only thing I would add is that the city is still open for business. We did release a relief package, and our priority is to support relief funding and try to get that going from a local perspective. Sales and use taxes, we're waiving the penalty and the interest for late payment for February and March. We will waive it on a case-to-case basis. Same with utilities. They will work with businesses and will not disconnect them because of the utility bills if they can't pay. It's on a case-by-case basis. So my encouragement is call the city if we're willing to work with businesses who are hurting in this season.
Great, thank you. Well, thank you all so much for attending, and Dirk, I'll let you do some closing comments.
You bet. Thanks, Bobbie. All of you, if we could give you a round of applause, we would. Thank you for your time today and sharing your expertise with us. You can tell from both the breadth and the detailed depth of the questions, the level of concern and the need for information that you provided today. So thank you very much for that. One of the final questions, and I also can't type in the text box, but Danny Reeves asked if a follow-up meeting could be established in a couple of weeks to come back with the same group, and we'll be in touch with you folks and see if you're willing to. In the meantime, one more shout out from Lewis, Roca, Rothgerber, and Kniffin, David Kunstle, and Bobbie Collins, from Stockman, Kast, Ryan, Trinity Bradley-Anderson, and Jordan Empey. From 5 Star Bank, thanks to Aileen Berrios. From the City of Colorado Springs, Yemi, Mobolade. Thank you all for joining us today, and we look forward to seeing your faces, if not the rest of you, very, very soon again. Listeners, one more resource that I'll mention to you. Chamber and EDC, at our website, we have a resources page that is both current and comprehensive, and we encourage you to go there with links to lots of other sites for information, and also watch there for future Chamber Connects like this, where we'll bring subject matter experts to you via virtual technology. In the meantime, everybody, be safe, do good, let's stick together through this. Thanks, everybody.